Journalist Siddarth Zarabi joins me over the phone line. Thank you very much, Siddarth, first of all, for talking to NEWS9. Now, what we're witnessing here is a complete low. After demonetization, of course, Sensex is down over 2,300 points, while Nifty is down with over 500 points. So, is it, of course, one of the factors is COVID-19. But can we completely pin all of it on COVID-19?
Well, the current state of the Indian stock market is actually a combination of several factors. Both our stock exchange indexes, the Bombay Stock Exchange Sensex and the National Stock Exchange Nifty, have fallen to their largest single-day loss ever. The Sensex has slipped around 2,300 points. It's a 15-month low. And the Nifty Bank Index is also down 15 a month. This is what is called a bear phase in our market, and Dalal Street is not reacting only to COVID, the virus fear, but also what has transpired in Yes Bank. There are fears about the growing impact of this disruption on our companies as well as our activities. We already learned that Prime Minister Narendra Modi has had to cancel his visit to Bangladesh. So there is an all-round impact that we are seeing from multiple factors. The Yes Bank crisis is also playing on the mind of investors at this situation.
That's right, Siddarth. Now, what are we looking at, in the near future? Situation getting any better?
Well, that is a very interesting question that you ask, and for your viewers, I would like to say that there are two important things that they should be looking at. First of all, apart from the stock market fall, there is another important fall that is happening, which is global crude oil prices. As we know, crude oil is one of the largest import items for the government of India, and the prices of petrol and diesel for all of us in India are a very, very crucial thing at any point of time. And because of recent developments in the last 2-3 days, where Saudi Arabia has decided to increase its production, and there is a oil price war that is going on, this will be a big benefit for India. And this benefit should translate in the near term, in some time, I expect, into lower petrol and diesel prices in India. I repeat that petrol and diesel prices are likely to fall in India as global oil prices fall. Of course, that is a decision that will be taken by the oil marketing companies. This is one of the impacts. The second impact is as far as what we would call the bank issue, where a lot of people are worried about Yes Bank. I would say at this stage, we will have to wait for the RBI and for the State Bank of India to complete the rescue that they have undertaken for Yes Bank depositors. And I would say that that issue should also get resolved in the next 3 to 4 weeks. Let me also inform your viewers that my sources here in New Delhi are telling me that there is a strong possibility of the deposit limit, which is at 50,000 currently, as far as Yes Bank customers are concerned, and there are lakhs of those customers. I am told that that deposit limit will be relaxed to some extent very, very soon. So that is the second important thing that we need to keep in mind at this stage. And third and finally, if there are people who are investing in the stock market or in mutual funds, I would say that this is a time of extreme volatility, and therefore they should remain extremely cautious and be very, very disciplined in their investment. This is not the time to jump into taking any bets at this stage.
Right. Siddarth, have markets in other countries also affected?
You are absolutely right in your question with regard to what is happening in other markets. There has been a fall in most global stock markets as well as the currency markets. You would know that India also, one of the key things that has happened is that the rupee dollar exchange rate has seen the rupee fall below 74 rupees today to the dollar. And as far as global indexes are concerned, for example, the FTSE or the CAC or DAX, their futures are down 9% each. There are concerns about the economic impact in the United States of America, as well as in other major economies, because there are individual sectors also that are likely to take a big hit: airlines, manufacturing, because of the China issue. The Chinese stock market has also fallen over 3%, and therefore one of the biggest reasons for the current nervousness is also the fact that the United States, the Dow Jones index, which is a crucial index, is down around 1,255 points, the futures of the Dow futures as they are called. So globally also there is extreme nervousness and volatility. All the major European future indexes are also down 10.2%, CAC futures, DAX. So this is a time, like I said, that there is nervousness all around the world as to the impact of the virus epidemic in China, and it's global, the coronavirus outbreak. The second one is the oil war, crude oil war. And the third is second round impact. Please remember that crude oil prices have fallen the most since 1991 today. And these are extraordinary times, and obviously stock markets are reacting.
Siddarth, I'm short of time. Let me quickly ask you this. You know, this fluctuation has been happening quite often. So what are the steps for revival?
In the Indian context, we will need to see early resolution of Yes Bank. The government and the RBI will have to be very, very active in assuring the entire country that the problems around Yes Bank will be settled very, very quickly, and there will be no other banks or financial institutions that will see any sort of trouble. The government will also have to act on sector-specific revival packages. For instance, people have reduced their flying in the last 2-3 weeks in India, and the aviation sector in India is likely to take a big hit. The tourism sector, the hospitality industry, hotels, even railway travel and other sectors are going to see an impact from Kashmir to Kanyakumari. And that is why I would say that the government will have to come up with sector-specific packages. If the stock of Reliance Industries has fallen the most in 11 years, it is one of the safest long-term stocks in India, and the 10-year government yield has breached 6%. This means that there is a lot of nervousness, and the government and RBI will need to step up their communication and reassure investors.
Thank you very much, Siddarth, for joining us with all of those important insights.